Guys, we got some exciting news. Bitcoin could be about to tap into an $11.5 trillion market. That does not mean Bitcoin is going to get $11.5 trillion. No, but it could definitely be part of that market. That market is obviously sovereign wealth funds. And we've talked about a little bit about this before with Dubai and the UAE. They have like $500 billion or something, and they're looking to invest a little bit into cryptocurrencies. They haven't done so yet, but BlackRock, the cabal, is talking to them about it. And that is exciting. And where I get my statistics for the Sovereign Wealth Fund, basically right here. Sovereign Wealth Funds, SWFs, have over 11.5 trillion in assets under management as of February 2023. Most of these 176 funds are sponsored by non-Western countries, and their growth has made SWFs important international investors, particularly in private equity trading. So these sovereign wealth funds have a lot of money, even more than all of BlackRock at this point. So BlackRock is trying to coax them into buying. Now, the ones in the UAE and the Dubai already have minds on buying, but others might be buying as well. So BlackRock sees sovereign wealth funds pensions coming to Bitcoin ETFs. The asset manager has been helping educate pension funds, endowments, and sovereign wealth funds about new spot Bitcoin ETF products. BlackRock's head of digital assets said financial institutions are holding diligence and research conversations with BlackRock playing the educational role, said Robert Michnick, the firm's head of digital assets. BlackRock has been talking about Bitcoin to these sorts of institutions for several years. While becoming the biggest spot Bitcoin ETF would be an impressive milestone, BlackRock says it really isn't focused on the size competition with Grayscale's GBTC. Because BlackRock also knows they're going to actually surpass Grayscale sooner rather than later. There's no way that Grayscale can actually stay bigger than them. Because Grayscale's still bleeding. BlackRock, although it has negative outflows for like one day this week, it's still going to be overall positive. And they're telling you to not be fooled by the break in inflows. After 71 straight days of inflows, that's not a problem. Sooner or later, you're going to have some outflows. The current lull is likely to be followed by a new wave from a different type of investors, said Robert Michnick, head of digital assets for BlackRock. The coming months could see financial institutions such as sovereign wealth funds, pension funds, and endowments start to trade in spot ETFs, Michnick said in an interview. The firm is seeing a reignition of the discussion around Bitcoin, which turns on the topic of allocating Bitcoin to and how to think about it from a portfolio construction perspective. So basically, these institutions are basically looking at their Bitcoin allocation strategy. But the sovereign wealth funds obviously has to file paperwork and get their prerequisite permission from government and stuff to do so. And I think several of them are about to come in. Like many of these interested firms, whether we're talking about pensions, endowments, sovereign wealth funds, insurers, other asset managers, family offices play a role from an educational perspective, and the interest is not new. BlackRock has been talking about Bitcoin to these sorts of institutions for several years, but they've only gotten this ETF about 3 to 4 months ago, and there's a lot of pent-up demand, but there is a lot of education, and there is a lot of paperwork, and there's a lot of convincing right now to do, and this money is about to come in. So basically, there's been about 76 billion accumulated across these products since their approval in January so far. Some registered investment advisors, a decent-sized subset of wealth advisory, are already offering BlackRock's IBIT ETF, but only on an unsolicited basis, which means they're not offering their clients this ETF, but it's there if their clients ask about it. But I think soon that will change and it will be part of their regular products offering, and that could be really, really huge. The next step is expected to be unrestricted offering of Bitcoin ETFs to clients of large wealth advisory players like Morgan Stanley, and that's a lot more like institutional based or rich people based money. So the adoption phase really hasn't started yet. The only people that have bought BlackRock and Bitcoin ETF so far are the ones that already knew about it beforehand and asked about it and asked to invest in these things. While the people that aren't familiar with Bitcoin, they haven't really got the regulatory approval or basically the paperwork approval to actually basically expose these people to these digital assets. And that's going to happen within the next few months. So they're saying like the lull is basically expected, but the second wave is going to be even bigger than the first. And remember, these sovereign wealth funds, like several of them are looking to come in, and these are a huge thing. $11.5 trillion worth of money in these sovereign wealth funds. And you add that to insurers, asset managers, pensions, and endowments, and you're looking at maybe like, 30, $40 trillion of possible value. Obviously, not all of that's going to come into crypto, but if we even get like 1/10 of that, that's several $100 billion coming in. And several $100 billion coming in is going to raise the market cap by a lot more than several $100 billion. It's not a 1-to-1 ratio. Once you get past like the supply, once you actually get past the resistances, it's like 1-to-10, 1-to-20, something like that. They've actually done some calculations about it. So the thing about IBIT is like, BlackRock is not really concerned about competing with Grayscale. Grayscale's been bleeding like ever since basically the ETF got approved. So they're eventually going to pass Grayscale. But right now, like BlackRock is trying to educate pension funds and sovereign wealth funds, endowments. And that's, I think, going to bear fruit within the next 3 or 4 months, because it does take a while for these guys to actually get permission to invest in them. But there's a lot of interest in it. They want to get in on these new assets, but they do know that these new assets like crypto are very, very volatile. So they're going to have to be very careful. It's going to be like a slow trickle in first for some of these funds. Like, do you buy in the UAE? Might buy a lot at first, but the rest of these funds are probably going to trickle in. But just that trickle in is going to be enough to constantly push us up. So don't think the ETF pump is over. It's not. And I think it's just actually starting right now based on the amount of money that's actually trickled into the ETFs. So that's what I have to say for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you and have a nice day.